Hey guys, V. Rigoni, Max, high performance real estate entrepreneur. Today we're going to be talking about inflation. How do you beat that thing, that beast, Because we've been feeling it again. Now, before we do that, if you like this content, make sure that you hit the subscribe button and you hit the like button. What the hell? Why not? So there's this thing out there that's, we've been seeing for the last couple of years, this inflation thing. People have been kind of like disturbed over it, but boy, is it raising its head up again. And, the Fed, they raised those interest rates 11 times. And the reason they do that is because they're really hoping it'll slow the economy down. They actually want people on some level to lose their jobs, and they want the price of goods and services to come down. And the only way you do that is to create capacity from what is already existing. And so that means that, things slow, the economy slows, you kind of lose your job, you're not happy about that. But that's what they're looking for in order to get this thing called the inflation under control. And yeah, it's like a beast. I mean, just look at what's happening. Have you gotten your insurance notices lately? Homeowners insurance is up anywhere between 35 to 50%. That's right. I mean, we have a fairly large portfolio of properties. The insurance premiums came in on at almost a 50% increase. That's insane. So now we're back out shopping, looking for the best prices. But hell, how good are we going to get it? Probably, somewhere maybe up 30%. These are things that you have no control over. You got to have insurance. It's mandated, right? It's mandated by the government that most states that you have to have auto insurance. It's mandated by your mortgage company that you have homeowners insurance. I mean, they got you by the short hairs. And now they're just raising these prices. Like, who in the hell raises their prices almost 50% in 1 year? Right? On top of that, you have inflation caused by the government in the sense of taxation. Right? If you've got a portfolio of properties, we just got all our tax bills. And yeah, I'm bitching about it. Some of our taxes went up 30, 40% in 1 year. They say it's a quadrennial reassessment of properties. Oh, because your property values went up, so you need to pay more. But shit, when properties went down in value, did you pay less? Did they cut your taxes? No. Then they say, oh, we need to have increases because it costs a certain amount of money to run the government. This is the kind of BS that you kind of live under, right? When you're living in whether you're living in a democracy or in a republic or wherever, you still got all this stuff that goes on. Now, again, I'm not here to have an argument over the, what they're doing with the money and all that kind of baloney, except it's costing you more money. It's costing me more money. We're looking at this and trying to say, how do we fix this? What do we do to get through all this? Because after all, you got the Biden administration out there saying, oh, inflation's way down. Is that not bullshit or what? Is your inflation down? I don't think so. Because if you just paid your car insurance, you know what I'm talking about. If you just got into notice about your escrow having to go up to cover your homeowner's insurance and your new property tax insurance, yeah, your new property taxes, you know what I'm talking about. These are the things that inflation will get you. It's just not on eggs and bacon and the food you buy, the clothes you wear, the plumber that comes out and fixes your toilet, and now it's $30 more this year than it would have cost last year. That's all part of inflation also. You're living with all of this. And at the same time, they gave you a 4% increase at work. How in the hell are you going to deal with it? Especially when they pushed it very quickly, like your insurance just went up by $300, your car insurance. I mean, things like that. Your income didn't go up that much to cover that one bill. So, when you add that bill with all the other ones that have gone up. So that's where I'm trying to get at. So how do you beat this thing called inflation? Because what I've been just telling you about is all the negative things that have to do with inflation. Because what does it do? It squeezes your budget. That's right. It squeezes your budget. And that gets painful. Why? Because all of a sudden you got more month than money. In life, you should always end up with more money at the end of the month than month. Well, that's not been happening for a lot of people. So the question is, are you one of the people that want to change that direction in your life? When this program is about creating wealth, it's about maintaining wealth. it's about getting there, getting that financial freedom. It's just not about stacking the Benjamins. It's about getting that money to be working for you so you can work less. So how do you make that happen when inflation is just, they're telling you it's 3.5% or so. Yeah. Does inflation feel like it's 3.5% to you? So I don't know who they're figuring that inflation rate for, but I'm feeling a lot more of it than that 3.5% would represent. And if you're in the same boat, then you know what I'm talking about. Now, how do we get past that? Well, listen, it's what you choose to invest in. It's what the course of your life will be. If you want to see, the part of the inflation that I'm sitting here bitching and moaning about is the cost part, but you're missing the other part, the part that I celebrate. Now, when I say that I celebrate inflation, then I'm going to get a lot of hate mail, right? All right, hate comments, all right, which I love. Send me the hate comments. It makes me laugh. It's like I said to you before, you don't get to my age without having a thick skin. You don't do what I've done without having a thick skin. So when you send me a hate comment, it makes me laugh. Sometimes it just tells me the level of ignorance in which most people live under. But not to go down that rabbit hole, let's just talk about why inflation works for me. And it works for investors. It works for my investors. It works for me as an investor. Right? First of all, which is very unusual, the stock market has continued to do very well during this inflationary period of time. That isn't always normal. So if you've got a 401k, you've been pretty happy with that part of inflation. Now, will that last? I don't think so. Eventually, there's a reckoning that comes along to the stock market, because what the stock market really hates is high interest rates, because then it causes the cost of everything they do costs more money, because they live off of borrowed money, right? And those rates go up. The other thing they live off of is borrowed money, right, is other people's money, right? OPM. The other thing they live off is OPT, other people's time. And as you know, when there's inflation, the cost of labor goes up. You expect to get wage increases so you can cover the cost of your inflation, right? Now, you may not be happy with it, but no matter what, it's costing the employer more money. So that's why, as time will go along, you are going to see that at some point, the stock market is not going to be a happy place. If this inflation gets back out of control again, and for, like I'm saying, for most people, the inflation is still out of control. But we're talking about on a corporate basis. Now, but how do you solve for that? Well, as an individual investor, as a person that has real estate syndications and has real estate funds that people invest in, what we try to do is we also try to, at this point, we know that our real estate values are going up. Now, does that mean every classification of real estate is going up? No, it doesn't. But our commercial values have gone up. Why? Because the rents have gone up over the top of those commercial buildings. And when the rent goes up, what happens to the valuation of the building? When the rents go up on a commercial property, the building value goes up. So we know that's what inflation has done. Now, what about, the marinas, the golf courses? Again, it's all land. It's all property. Inflation, real estate loves inflation. Real estate sees inflation as a way for it to go up in value. Now, you may hate that in the sense of, when our inflation goes up, as far as our insurance on the marina, we then have to raise the rents on the RVs. We have to raise the boat slip prices, all that. But that's the operation of the business. The land value goes up with inflation. That's what we're looking at. And so when you have land, when you have commercial property during inflationary periods of time, yes, costs go up. But I can tell you, folks, the value of the properties go way past those additional costs. You see, as an individual that goes to work every day like yourself, and you go there and you're fighting inflation based upon only your wages, only your salary. You might say to me, yeah, but I own a home. I live in it. Fantastic. At least that's one thing that'll do well during inflation. But if you go to sell your house, unless you're going to rent after that, you got to use that money to go buy another house, right? So, but at least you're neutralizing how inflation will affect the next house, because you're selling yours for more than what you paid for it, even though you're buying the other one for more also than the other guy paid for it. So it's a neutral thing. But that's really good during an inflationary period of time, is to at least stay neutral. But again, if you want to beat inflation, then you have to have a vehicle that will do that. All right. The bank isn't going to do that. Yeah. You're getting the best interest rates you've gotten in 20 years in the bank. So let's look at that. All right. Now, if you apply how inflation and taxes deal with that, if you put $100,000 in the bank at 5%, that's $5,000, right? That you earned in a year, right? Then if you have to pay the taxes on it, you get whacked for that. Because remember, on ordinary income, you got to pay taxes on all that income, right? Then you get nailed with inflation against that money. Before you know it, it works out that with a 24% tax rate, both federal and state together, and a 3% inflation rate, right? Your actual net gain on your $100,000 after you think you earned 5% is about $680 net. Do the math. It's there. In other words, you literally netted out after taxes and inflation $620, $680 on $100,000 that you had in the bank. And why is that? Well, because they gave you your income return, right? They gave you the interest rate return, but your value of your money did not go up. There was no net increase in valuation. There was a decrease based upon inflation because your dollars are worth less money tomorrow than they are today during inflationary periods, right? If you got $100 today and that same $100 in a year at a 5% inflation means that it will only buy $950 worth of goods and services in a year. Today it'll buy $1,000 worth, but with 5% inflation over a year, you get the same number of Benjamins. You still get 10 of them, but you can only use those, but you're only going to buy $950 worth of goods and services. That's what inflation does to your money. Now, taxation also beats the shit out of it, but there's ways to get around taxation. The only way you can get around inflation is to have assets that while your equity is in that asset, you see, when you put that equity into a bank account, into a CD, that equity is just earning the interest, like we just said. But when you put that $100,000 into something like real estate, if the real estate is going up in value, which it does most of the time, after all, you think the prices of homes are cheaper today? You think the price of apartment buildings are cheaper today than they were 20 years ago? So your principal inside that property, the equity, the valuation of your property, if inflation's at 3.5%, 4%, your property went up by 3.5%, 4%, which makes you another $4,000 or $5,000. Does that make sense? So you're going to get the money from the return off the rents that'll give you that 5 or 6% that the bank is giving you, but then you're going to get another 4, 5, 6% from the increase in the value of the property. You don't get that in the bank. That's what's unique about real estate. So when real estate gets hit with inflation, which it did for a number of years, and there's been a little bit of a slowdown, but we're seeing inflation coming back. That's what the Federal Reserve is so scared about. That's why they're not cutting interest rates. You may not even see them cut them more than one time or any the rest of this whole year because they're seeing inflation coming back into the marketplace. And so the way to beat inflation is owning other kinds of real estate, not just your home, because like we explained, if you own your home, yes, you benefit from that on the inflation. In the long term, when you go to retire, if at that point you downsize, yes, you'll make money based upon the inflation of your home over what you'll probably buy to retire in. As long as what you're buying to retiring in is less money than the house you sold, right? And so then you're going to feel really good about that. But I don't want you to have to wait 40 freaking years to feel good about something. So if you choose real estate as a vehicle in which to earn money, not only the return from the tenant, from the rental, not only the tax benefits that come along with that property, being used in that property as a rental, whether it's a single family home or it's a multifamily building or a commercial building, you get the tax benefits of being a landlord. Then you also get that appreciation. Now, when I said to you, you'd make 3 or 4% more on your money because the $100,000 would go up, That's like a truth and something false at the same time. That's if you paid off your building and you had a $100,000 building and you put $100,000 cash down. But the real magic then comes in when it comes to inflation is that if that $100,000 bought you a $400,000 building because the bank was willing to lend you the other $300,000, now you get to use the leverage part of real estate, which you don't get when you put money into a CD. You put $100,000 in, your return's based upon the $100,000. But you put $100,000 into a piece of property, and let's say it's 25% down, and so then therefore you're going to borrow $300,000. Now when that property goes up 4% in a year, it's going up 4% of the 400, not the 4% of the $100,000 down payment. Is this kind of like making you think a little? Because it should be getting a little more exciting. Because what's 4% of $400,000? Well, we know that's $16,000, not the $4,000 if you had only owned a $100,000 building and you paid cash for it. Well, then the 4% would only represent $4,000. But when it's when it's a $400,000 building in which you have a $100,000 down payment in, you're making $16,000 based upon a 4% increase. Now, what's your rate of return? Well, if you put $100,000 down and you made $16,000 on the appreciation, and then let's say you made a couple percent more, another 4 or 5% from the rents, just use 5. Now you made 21% on your initial investment, 21% for that year. Now you don't get taxed on the $16,000 because that's appreciation. We'll deal with that later. There's ways to get around being taxed on that money when you go to sell that building. But right now you're only going to get taxed on the $4,000 that you made or $5,000 you made off the rent. But that's going to get neutralized by the depreciation, by the tax benefits. So your money went up in value somewhere between $20,000 and $21,000 this year, and you're not going to pay any taxes on any of it because you're going to have the depreciation, the write-offs, compared to what? Now, let's assume that inflation hits that money too on some level. So let's take that $16,000 and, so you're going to lose a little valuation to inflation if you sold the building and took the money. But when you put that $100,000 in the bank, right, after taxes and inflation, your net gain was about $600 and something compared to what? $16,000 of appreciation and then another $4,000 or $5,000 based upon the rent valuation, earning the rent. And let's say you didn't make that much rent. I don't know. Let's just give it at $2,000. Let's say you're only making $200 a month in net profit off of the rent. When you add it with the appreciation, you made 16 on the appreciation, another 24. I mean, that's $18,400. No matter how you run this calculation, as long as property values are not going down, you win. Now, what happens if property values go down? Well, you're still going to get the rent. You won't get the appreciation. You'll actually have some loss of internal value. But remember, in the last 80 years, you can count on one hand the number of years where the real estate market went down. When we lived through that for 2 of those 5 in 07, 08. But it bottomed out and then took off again. And we all know that was brought to you by the government and the banks, and that was all mortgage fraud. Real estate was the victim. But if you held on to it, it all came back and made more money. That's the other thing about real estate. It's not a get-rich-fast deal, but it's a stay-rich. It's a slower get-rich, but it's a stay-rich. That's what equity does for you. You look at your parents' home that they've lived there for 30 years. Is it worth the same amount of money that when they paid for it, when they bought it? No. Even people who bought houses and apartments at the very top of the last real estate cycle of, let's say, 08, 09, there's been another one since. So we're not talking about the real estate cycle that just ended. We're just talking about going back in history so you can put a little time in there. Look at how much more valuable those properties are. And during all that same period of time, the reason they're more valuable because even when inflation was almost next to nothing, real estate inflation was there. And so then when the incomes, when you got more income off the property because the interest rates on your loans were smaller and you pulled more cash flow, more positive cash flow, you still had the depreciation to cover that and you paid less taxes. I mean, in other words, it's very difficult to come up with a way where real estate does not work for you, especially if we're talking about beating inflation. Because what else does well in inflation? Well, gold can do well, but it hasn't done anywhere near as well as, as it did in the past when it came to inflation. The stock market has done well in this initial time, and that's because of all the money they printed. But that'll eventually end, and they'll recalculate the stock market. And when inflation, as it gets worse, it'll get hit by that too. So you can't have all your money in one thing. I agree with that 100%. But not to own some real estate in order to fight inflation, just to own the house you live in? What is the deal? Again, more people have gotten wealthy, financially free from owning real estate than anything else. Any 401k, any IRA, any savings account, any treasury bond, any tech company. Yes, a tech company will get thousands of people rich, but that's how many Microsofts are there? How many Teslas are there? How many Apples are out there? And how many people got into them in the early stages? Because those are the people who got rich. The rest of the people are buying and selling their stock and getting a gain or a loss. But real estate is an example of almost true democracy in the sense of you can vote on it, you can go and you can own it. No one's restricting your ability to do that. The only person that restricts your ability to own real estate is you, either due to inconvenience. In other words, I don't want to deal with tenants, toilets, and termites, no problem. Fear of financial failure. Well, I guess you're going to have to re-educate yourself and get over that and understand how financing on real estate works. And once you realize that it gets really difficult to screw up, but people do screw up. And the number one way to screw up on real estate is the wrong kind of financing. We're going to be talking about that in another video about multifamily, about how a certain percentage of people in the last several years, prior to the increase in the interest rates, how they really screwed up in the multifamily space. But you know what that leads to? Opportunities. It goes from weak hands to strong hands. So be prepared. There's going to be opportunities to come because of some people who made the wrong choices. But one of the places you can screw up in real estate is get the wrong kind of financing. And in this case, what we're really talking about is they put an adjustable rate mortgage on an apartment building when interest rates were fixed rates were at 4%, the lowest they'd ever been for commercial property. And instead they opted for a adjustable rate mortgage to make the deal work. Again, we'll talk about that later, but that's one way you can screw up. It gets really difficult to screw up in real estate. That's why so many people succeed at it. Because you think everybody that owns real estate as a rental property, you think they're geniuses? No, they just know how to do percentages. So figure out percentages and you become a real estate mogul. This is how this thing works. So you can either sit there and decide that you want to continue to be a victim to inflation. Because let me tell you guys and ladies, they printed $7 trillion over the course of less than 2 years. That's where they're running into this problem. That's where Jay Powell keeps talking about he has this problem. And then there's the velocity of money, where that money makes more money, creates more. But what does it create? It creates more inflation. Then you got the government totally out of control with their spending. I've mentioned this before. Every 100 days, they're adding $1 trillion to the national debt. Let me say that again. Every 100 days, they're adding $1 trillion to the national debt. One more time. Every 100 days, they're adding $1 trillion of debt to the national debt. You don't think that creates inflation? Because they got to pay high interest rates now when they borrow that money. And so all these things work to cause hard assets, real assets, to go up in value. Some do better than others. Real estate's one of the better ones. Why do I like real estate? Because it also gives you a cash flow while you're waiting for it to go up in value. If you don't get the cash flow, forget the deal. Do not look for any piece of real estate. This is a little real estate advice on the side in the sense of if I was doing it, I would never look to be buying a piece of property solely for appreciation. If it does not cash flow, what that means is if you don't end up with more money than the cost of the expenses to run the building and the mortgage don't do the deal. You'll have more grief over the deal that you did and you did wrong than the deal that you missed. You're much better off grieving over the deal you missed than doing a deal and doing a bad deal. Does that make sense? We'll talk about that as we go forward too. But this is what I'm trying to get you to understand. Real estate is your best buddy when it comes to inflation. It's giving you money every day. So I want you to think about this. Leave me some comments if you want some direction, whatever. I'm open to it. But hey, if you feel like, inflation's been beating you up, if you're like, what the heck, And now, let me just address one thing before I leave here. Yes, are we happy that taxes went up? No. Does that cut into our cash flow? Absolutely. Are we happy that insurance premiums went up? No. That cuts into our cash flow. But our cash flow is sufficient, and we did the deal good enough that even with these increases, we still are going to win. Why? Because we get to stick around because the valuations are going up for the same reasons, the inflation that is taking place. And so that's when you're saying to me, well, how are you going to deal with that? Well, you got to make sure that you have reserves. You got to make sure that you have the right cash flow when you go to do the underwriting on the property. When that underwriting is when you're going to determine based upon the numbers, the expenses, the interest rates on the loans. You figure out the cost of your equity. You figure out all those kinds of things. You determine whether or not you're going to have the right kind of cash flow. And if you got the right kind of cash flow, it should be able to sustain beyond just the fact that the taxes went up and just because the fact that the insurance went up. Does it make you happy? No. Should it put you out of business? No. Now you might be saying, I don't have those problems. I don't own that kind of real estate. That's fine. But if I'm going to tell you that we're not happy based upon these things, I'm going to tell you why. And the fact that it's not going to destroy us is because we have sufficient cash flow from each deal. So be very careful of people that say, just buy real estate. Don't worry about the cash flow. Just buy it for the appreciation. That's a rough gig, guys. That's the kind of thing that puts you under in bad times. But right now, we've got inflationary cycle. This is where it's at. So if you're on an individual basis going to work and you're figuring out, I went to the grocery store and I got half the amount of stuff for twice the price, or I got half the amount of stuff for what I used to pay for twice the amount of stuff, and you're unhappy, you got to think about how to change the direction of your financial life. Because right now, chances are for 95% of all Americans, the number one source and the only source of income is their job. You have to create other sources of income that will either come from choosing real estate or buying a business or starting a business that you really understand. Those are all other ways to create more income. But I find that owning real estate is the simplest of all of them. That's right. Why? Because you have more control over it. Do you have control over whether Apple stock goes up or down? Absolutely not. But you do have control over how the property is being managed, over the rents you're charging. You have control over some of the operational aspects of your investment. Now, some people might say, hey, I don't want that control. That's a burden. Well, then real estate may not be your deal. Because in the beginning, you're going to have some hands-on control. As your portfolio grows and your cash flow grows, yes, you can farm that out to a property manager. But in the beginning, if you've got a small portfolio, you're going to have to do some of this yourself. So what do I always say? Let's get out there. Think big, start now, and grow fast. You better grow fast because you got inflation right on your butt, and that ain't no BS. So talk to you soon. Let's get out there. Let's make it happen.